Hi, this is Greg Kilpack, and one of my subscribers asked about new gold, symbol NGD. He said, can you make a video on new gold? My goal is to sell at a price of $7 per share within a month or two. Okay, well, let's take a look at it and see if he has a good chance of success in this trade. Now, there's the logo for new gold. Here's a chart of new gold of the last 6 months. Now, you can see new gold has been up and down over the last 6 months. First off, let's take a look at the big picture for new gold. There's a 5-year chart. New gold has climbed quite a bit over the last 5 years. It went from $1 per share up to $14 per share. So if your timing was perfect, you could have made 14 times your money over that 2 to 3 year time period right there. But over the last 2 years or so, new gold has topped out at $14 per share, and the current price is right around $6 per share, $5.88, as of yesterday, Friday, October 4th. Okay, so it's obviously lost more than 50% in the last 2 years. Now, let's get the short-term picture again. Okay, so we've got the big downtrend going on, and it may have hit support. We're starting to go sideways. It may have hit support right around $6 per share. So let's take a look at something else. There's the big picture for gold prices. Obviously, a company that's a gold mining company is going to be largely valued based on the price of its major product, which is, of course, is gold. So it's going to follow gold prices. Let's look at a short-term chart for gold. Okay, the stock has done the exact same thing over the past year. It's gone down. Let's get an even closer point of view on the stock, or rather on gold. Okay, gold has been starting to climb a little bit in the last 3 months. Let's look at a 6-month chart here. Okay, well, in the last 6 months it's come down pretty hard, and it's gone up to this price level here around 1400. It's pulled back down. Now it looks like we might be hitting some sort of long-term support, maybe. The way to find that out is if prices hold above this support level floor of around $1,200 per share. You know, well, that's great. If gold stabilizes, that would certainly be good for this trade. But still, we want gold prices to be going back up. That'll help our stock. Okay, so let's go back to the stock. Now, just looking at this over the last 6 months, gold has been bouncing around quite a bit, easily between $6 and $8 per share. It's hit $8 per share twice, and it's hit $6 per share twice. So really, overall, the stock's going sideways. Just with that knowledge alone, you have a pretty fair shot of selling new gold at least $7 per share within a month or two. So that's a pretty fair guess. Now the question is, at what point do you want to sell and admit defeat? Admit that you're wrong and it's not going to work. I would say right around $5.50 per share. That way you can risk 50 cents per share to make at least $1. Preferably, I would say consider selling up at around $7.50 per share. So you can get a reward to risk ratio of 3 to 1, risking 50 cents per share to make $1.50. Okay, so if you did 1,000 shares on this, you'd be risking $500 to make $1,500. If you're comfortable with that risk and reward, then go for it. I'd say you have a pretty decent shot of success. Okay, now one other thing I wanted to look at before we move on, before we complete our analysis, is always look at the income statement of any stock that you want to buy. Even on a trade, I would want to do that. Okay, revenue has been going up, 530 million to 695 million to 791 million. That's a nice upward trajectory. Okay, here's the part that concerns me right here. is the cost of goods should be going up at about the same rate, but instead it's going up really high right here. In order to get that out of that much revenue, to get that much gold, they had to spend that much money. And so that's reflected in their gross profit. They had a nice increase in gross profit from here to here as gold prices were still climbing. But over the last year or two, it's cost them more to get the same or higher amounts of revenue. Therefore, their profits, their gross profits, have only climbed a little bit. From here, 315 million, to here, 330 million. That's a big concern, okay? This company could easily become not profitable and start having losses if gold prices drops. On the other hand, if gold prices rise quite a bit from here, this could once again be a very profitable company and grow at a faster rate, regardless of production. You know, if their production holds steady. Now here's the most important thing, of course, right here, profits, called net income in accounting speak. Okay, net income right there. So they went from 47 million 3 years ago to 2 years ago 179 million, very nice increase, to only really a small increase to 199 million. So that's troubling. Their profits have slowed down as far as rate of growth quite a bit in the last year or so. That's why the stock price is going down. As far as an investment, you know, it's not my favorite choice at this point. The time when I would have wanted to have bought it and be holding it, obviously, was when it was going up a lot. You know, 5 years ago, 3 to 5 years ago is when I would have want to have bought it. At this point, for an investment, not interested until I see gold prices start to climb steadily again. Really not my favorite trade or investment, but it's not bad. As far as the short-term trade that my friend was talking about, yeah, I think you have a pretty good chance of success, and I think it could be okay. Not my favorite vehicle for a trade either, but yeah, I think you have a good shot. So good luck with that. This is Greg Kilpack. I'm president of MarketTimingUniversity.com. Come to the website, learn more about the stock market, and get your free report. 3 things every investor must know to earn greater profits, take less risk, and invest with confidence. I hope you learned something new in this video, and have a great day.